Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Vox Markets for Sunday, the 22nd of January, starting off with the FTSE 100, where we were hoping that if there was a retracement from the top of that rising trend channel from September, it would come down to no lower than 77.30. I think the low was 77.26 or 24 during the week. In fact, on Thursday it was 77.26, so that was almost 10 out of 10 in terms of the weakest retracement we could have. Above that level on an end of day close basis, still looking for 8,000, hopefully as soon as the end of next month or perhaps even the next 2 weeks. But let's see how we go. Below the 77.30 zone, there's 76.70, which is that broken September resistance line in the worst case scenario. Would be back towards the 50-day moving average, currently around 75.30, but that's a long way down from where we are now. Moving along to the next market, which is the DAX, and here this has been echoing what we've seen at the FTSE over the recent past, and the Thursday-Friday pattern very similar. We had that old peak from March there around 14,900. And that's become new supports above 14,900 on an end of day close basis, looking for 15,500. At the top of that rising wedge from September, now it does look like a rising wedge, which obviously it can be a bearish setup. We've got both the 50 and 200-day moving averages rising, and really important that we've got the 200-day line rising there, and that does help inspire confidence despite that rising wedge bearish formation. On to the Dow, which has been the worst of the big three, let's say, and not even worse by quite an amount, in fact. We've had a bounce off that congestion zone there from December, January, which is one of our guesses that 33,000 area would be a support zone. Want to see an end of day close back above the 50-day moving average around the 33,500 level to get us back up to that main March-April 2022 resistance at 34,300. But still probably more on the side of looking higher than lower, just because of the way that we found support in that congestion zone. RSI still below 50 after that dip late in the week, and so we want to see that RSI back above neutral 50 and above the 50-day moving average on the price for confidence that the Dow is going to turn around. On to Bitcoin, which has been in some ways the star of the year, and this is what we wanted to see, what we've seen basically yesterday on Saturday. Break out of that little bull flag that we had, very tight bull flag, with the tighter they are, the better normally. We've got a rising 200-day line, rising 50-day line, and that means that we're in the run-up to a golden cross, potentially between the 50-day and 200-day lines. The run-up to a golden cross is traditionally the strongest part of the cycle, and so looking pretty confident here. We're just equaling September resistance near 23,000. Above that, although there is August resistance at 25, I'm really looking for the top of that broadening triangle from the end of June at 30,000 to be hit by the end of next month, which would be quite a result for crypto fans and something that they probably deserve after all the pain they have been through. Moving on to the stocks, and here we've got Alpha Growth, which it's been, I suppose, range bound over recent months. We've got a rising trend channel, a wide one from the end of 2021, top of that channel heading towards 5 pence. That's a target there, perhaps as soon as the end of next month or maybe going into March. The main thing here is we bounced off the 200-day moving average. That's rising, and also the floor of that channel around 2.2 pence, above 2.2, looking for 5 over the near term. On to Audioboom, which probably wins the prize for being one of the most difficult and horrible stocks over the last year or so. We had that double top through £22. We broke the 200-day moving average back in May around 14. A few false dawns along the way as well. The biggest false dawn was probably back at the end of October with that break of the 50-day moving average. There was a rally there, did work, but then we fell back below the 50-day line in December. Now what we're waiting for is a break of the November resistance area around 440. Probably, if you want to be safe, you call it 450, and then that would bring a target near the 50-day moving average at £5 in focus. The other thing we're waiting for is basically a break of the RSI 50 area. We had a failure below RSI 50, but we've been below RSI 50 since the beginning of December, and so that is really key in terms of getting this market back on a bull tack. The other positive, or a positive here, probably the only positive actually, is the bullish divergence with the January line. We had a lower low for January, but the RSI higher. So we are potentially in the build-up frame of mind, but below 450, difficult to get too enthusiastic, even though there could be decent upside if we break that level. On to stock which I know is followed by a lot of people who are sitting on the edge of their seat most of the time. Nice to see a bit of a reaction on Friday. I was suggesting that the volatility had gone down here, and we were in that little triangle there. Broke above 0.13, which was the resistance line from November, and we actually closed above the 50-day moving average, which is what I was hoping for, and probably so with the bulls. That means that we could be in a rising trend channel in the way that I've drawn from the end of October, and that's heading towards 0.25. So the overall message here above 0.15, we're looking for 0.25, which is a kind of setup we see many times, 15, 25, 40. Very much a keenly followed charting build-up or technical build-up pattern. Also got up above RSI 50 as well, so that's all good. So basically above 0.12 recent support, looking for a break of 0.15 to get to 0.25. Onto a stock which has been in the wars of late, Belluscura, and it looks like we've had a bear trap rebound here. So the low in October, 44 pence, we overshot on the downside towards 37. While we're above the 44 pence level, looking for the 50-day moving average at 60 pence, perhaps by the end of next month or even sooner. Bullish divergence backing the turnaround there. So lower low for January, but higher RSI, and that can signal that we've got decent momentum coming through on that bear trap. Moving along to stock which has taken a long time to rehabilitate itself over the near term, but maybe the crypto improvement and other factors helping Blue Star Capital. Nice bounce off the 50-day moving average there at 0.14 rather, and looking for 0.25 really at the top of that broadening triangle from September. So that 0.15, 0.25 kind of pattern there that we've seen at Barron also echoed there at Blue Star. On to Immupharma, and the reason, well, I suppose the main reason for looking at this is that we've seen a lot of life sciences stocks improve over the start of 2023. This is one of them as well. I suppose it's been a bear trap from below September support there at 2.25. Above that, we're looking for a retest of 4 pence and October resistance over by the course of next month. Had nice bounces off RSI 50 over the recent past as well as the 50-day moving average. So if you believe the technicals, Immupharma, it looks like it may be ready for recovery. Can't get enough of Kodal at the moment. Still buzzing after the last interview I did with the company. Great news for all concerned. Apart from the shorts, I suppose, and people who sold out earlier on. Here we've got a break of that resistance line there at 0.35, and we're currently looking for the top of that broadening triangle from June last year, as high as 0.55, by way of obviously a retest of 0.5, which was last year's resistance. But basically the pattern here above 0.35, looking for as high as 0.55 over the next month or so. And let's hope that the shares can hold and expand on the good news that we've had over recent times. Moving on to Premier African, and here triangle breakout, rising 50-day moving average and 200-day moving averages as well. Looks as though we are poised and primed to hit the top of that rising trend channel from back in the turn of the year last year up to 0.7 pence, and ideally that would be hit by the end of next month. Don't want to see the shares back below 0.53 and the 50-day moving average. On to Physiomics, and here we can see that if I can type in the right EPIC code, we've got a situation where we bounced up, sort of double bounce off the 3.6 pence area. That was basically the previous target for the shares. So old resistance becoming new support, above 3.6 pence, looking for a partial or even full retest of 1 year resistance as high as 6.5 pence, and maybe that could happen by the end of next month. One stock I just wanted to add in now, actually, which I wasn't going to look at, but I still cannot believe that we had that spike up in Polarean on FDA news, and the shares not only retraced back to former resistance, they actually then went back to former support at 45 pence. Be interesting to see now whether that mid-40s support zone actually holds, even though, well, as we have the good news in the bag, or recent good news in the bag, so that might be an opportunity for some brave souls who haven't been burnt on that spike to go in. But it just shows how in these markets with liquidity short, people will just sell stocks just to get their money back in the bank account. Moving on to QBT, which is otherwise known as quantum blockchain. Here, a nice consolidation here between the 200-day moving average at 1.175 and the old May resistance around 2.4 pence. Hoping for an imminent breakout now. An end-of-day close, obviously above 2.5 pence, could take the shares up to 3.5 pence, ideally by the end of next month. Finishing off with Zanaga, where apparently somebody commented that my previous target here was 11 pence, and then I reduced it to 7 pence. Don't remember that, but here we've got a rising trend channel here. That channel from August heading towards 8 pence, and that's the target here, hopefully while we remain above the 50-day moving average around 4.5 pence. You could say that there's a steeper channel there heading towards the formerly promised 11 pence zone, but I think the shares actually pulled along and went more sideways, and therefore the angle of trajectory to the upside rather more shallow than previously. But let's see if we can break through 6 pence and get up to 8 pence over the near term. That's it for me today. More updates during the week.